Hey traders, hope your week's been solid so far. Let's break down what happened today in the FX markets and look ahead to tomorrow's setups. A lot is unfolding across the board, especially with inflation data out of Europe and anticipation building around next week's Fed decision. Forex news you need to know. 1. Eurozone inflation holds steady, ECB tightrope continues. The euro saw modest movement today after Eurostat confirmed March inflation held at 2.4% year-over-year, aligning with forecasts. Core CPI was unchanged at 2.9%, which keeps the ECB in a tricky spot. On one hand, inflation is cooling. On the other, wage growth remains sticky, making a June rate cut likely, but not guaranteed. Euro to US dollar ticked slightly higher after the release but remains stuck in a broader downtrend. 2. US jobless claims come in lower. Weekly initial jobless claims dropped to 203,000 versus expectations of 215,000, pointing to continued labor market strength. That put a floor under the US dollar, especially heading into Friday's Philly Fed Manufacturing Index and the Fed's Beige Book next week. 3. BOJ's Ueda drops a subtle hint. In Tokyo, Bank of Japan Governor Kazuo Ueda said the central bank is watching FX volatility closely, which markets interpreted as a veiled threat of intervention if US dollar to Japanese yen keeps climbing. The yen recovered slightly, but US dollar to Japanese yen remains above 154, dangerously close to levels where Japan intervened back in 2022. Technical analysis. Major pairs. Euro to US dollar, sideways with bearish bias. Last price, 1.0642. Resistance, 1.0675, 1.0720. Support, 1.0600, 1.0550. We're still in that grinding downward channel that's been intact since early March. The pair tested 1.0675 today but couldn't hold above. Momentum favors the bears as long as we're below the 50-day SMA. If 1.0600 gives way, we could quickly see a push toward 1.0550. Tomorrow's setup, keep an eye on 1.0600. A break below there could invite aggressive selling, especially if US data surprises to the upside. Pound sterling to US dollar, bulls running out of steam. Last price, 1.2448. Resistance, 1.2500, 1.2570. Support, 1.2400, 1.2320. Cable briefly touched 1.2500 in the London session but couldn't sustain it. The broader trend remains neutral to bearish. UK CPI earlier this week came in soft, which dashed hopes of a hawkish shift from the bow. Tomorrow's setup, a daily close below 1.2400 would increase pressure for a move toward 1.2320. However, if we get weak US numbers, pound sterling to US dollar might bounce back toward 1.2500. US dollar to Japanese yen, intervention watch is on. Last price, 154.28. Resistance, 154.80, 155.50. Support, 153.80, 153.00. This is the pair everyone's watching. We're flirting with levels that have previously triggered BOJ intervention. The trend is firmly bullish, but the risk of sudden, sharp reversals is high. Tomorrow's setup, risky to chase longs here. Only seasoned traders should touch this pair now, and even then, tight stops are a must. A break below 153.80 might trigger a quick unwind. Forecast for Friday, April 19, 2025. Here's what's on the radar heading into Friday. US Philly Fed Manufacturing Index, 8:30 a.m. Eastern Time. Expectations are for a mild improvement. A surprise beat could strengthen the dollar. Fed speak, several Fed officials are scheduled to speak. Traders will be parsing comments for any hawkish or dovish leanings ahead of next week's FOMC meeting. Trader tips: how to approach the end of this week. 1. Don't overtrade US dollar to Japanese yen. It's tempting to ride the breakout, but with BOJ potentially around the corner, one intervention headline can wreck a position. If you trade it, keep your position size small and stops tight. 2. Watch for Friday fade moves. Fridays often see profit taking, especially in dollar pairs. If euro to US dollar or pound sterling to US dollar find support early, you might get a bounce into the close. 3. Macro over micro right now. With next week's Fed meeting looming, keep your eyes on broader themes: interest rate divergence, inflation dynamics, and risk sentiment. Those are what will drive the big moves, not random intraday data. 4. Use the range to your advantage. Most majors are range-bound right now. Until we see a major breakout, it makes more sense to fade the edges with defined stops. That's a wrap for Thursday. Trade smart, stay nimble, and don't forget, sometimes the best trade is no trade at all when the market's uncertain.